Hi, Market Mogul readers. Want to know what people at Goldman Sachs, JP Morgan, and Bain & Co. read every morning? The Daily Breakfast Briefing. Get all the insights you need in a short, sharp email, and it's free forever. Just sign up at themarketmogul.com. Welcome. You're listening to articles on themarketmogul.com. The Economics of the Transfer Market by Sophie Leach. As one of the most prosperous games in the world, the football pitch is home to more than just the sport itself. Wealthy investors and big-name companies compete on the field and together produce 6.6 billion euros in revenue across the top 20 clubs. In 2016, the Premier League broke the £1 billion barrier for the first time and conducted the most spending by any league in the world. Investment into a football team is often correlated with its success, and therefore many fans and scholars are intrigued in a process otherwise known as the transfer window. Every sports site has a tracker, ticker, or feed of transfer updates throughout the season, with two major peaks of January and the summer months when the transfer windows officially open. One of the great aspects of football is how the fundamentals of game theory and behavioral economics can be applied to it. From an economical point of view, it is a defined arena with clear variables and individual games, i.e. seasons, to compare and test. This article will look at just one part of this interesting world, and the transfer market or the football stock market. Players can often be viewed as investments that are traded between clubs based on their potential to pay returns. A player is valued based on how far they can boost attendance, television deals, and the prize money they are likely to win from various tournaments, but most of the time on how they can be developed and sold on to bigger clubs. However, usually, to build the greatest team, it is essential to gather the most talented players, spend millions in the process, and their performances will determine the outcome of the investments. Overview of the transfer market. Clubs, players, agents, and fans track the deals, which often present themselves in a state of confusion. By tracking the different persons involved in a transfer and their intentions, this article will illustrate the economic analysis involved in the exchange of football players and their contribution to a club's revenue. Firstly, however, what is a transfer? A transfer is the movement of a player or players to a club from another in exchange for something else, whether that be another player, cash, etc. The action of a transfer itself starts with a written offer made for a player followed by both parties exchanging negotiations until a decision is made. Every football fan will tell you that there are months of prequel action before a transfer deal, i.e. mind games between clubs, scouting for options, speaking with agents on player sentiment, etc. The most exciting deals happen in the January transfer window, which opens on January 1st and closes on February 2nd. This is because most major footballing competitions are ongoing at this point, and it represents the halfway point of the season. Clubs that are floundering are hoping to scoop up talent to improve their fortunes and are willing to overpay. The same goes for clubs who feel they're almost there and wish to get an extra piece to push them to the title. Others recognize there is no hope and wish to cut their losses. The players. Most people focus on the big transfers, and these do make up a massive proportion of the total transfer spending. Everyone knows the most significant January transfer was that of Fernando Torres, who moved from Liverpool to Chelsea for £50 million. Paul Pogba was signed by Manchester United for £89.3 million, after originally leaving them for Juventus in 2012 for just €1.5 million. However, the smaller, much more numerous transfers of younger footballers or seasoned veterans is a critical aspect of football. Players often do not take home percentages of a transfer deal, but can receive a signing bonus, such as Sol Campbell did when receiving a £2 million per year bonus in his move to Arsenal. Critically, it does set expectations for the player, as well as give a benchmark. If a player is sold for free, their morale can be affected to the point of developing a chip on their shoulder. Like an investment, being moved does not necessarily benefit them financially or personally, or even how likely they are to reach their full potential. However, just as with an investment, the type of player has a major influence on the details of the transfer if they are big enough. Smaller players are known to have so little control that FIFA has had to place numerous bans and apply fines to even the largest clubs for their indiscretions, including the likes of Barcelona and Real Madrid. Once on a contract, players have little choice but to move when their club receives a higher offer. Players do have the option to refuse a transfer, but usually, if a club states its intent to sell you, the feeling of not being wanted is enough to convince them. Over time, players have begun to take greater control of their future with the power of super agents. Since several famous court cases of the 90s, including the Bosman Rule, completely changed the game, players can increasingly choose their preferred destination. The Bosman ruling allowed for players to leave their current club for free once their contract had expired. This may sound normal, but was not the case 20 years ago. The result was that clubs in Europe could field more than just 2 non-native players and could be forced to transfer a player if the player threatened to leave for free once their contract expired. Rather than make no money, clubs like Liverpool, Rangers, and Ajax were forced to sell players like Kluivert, McManaman, and Laudrup, while players like Lewandowski, Pirlo, and Ballack moved for free. In summary, popular known players influence the total value of the transfer just as much as market dynamics do. Clubs. By the time a player has signed a contract, they have in fact been tracked by the club in question for a few months at the very minimum. The larger clubs of the Premier League have networks of scouts who monitor players they are hoping to sign for a whole season or more and will keep up an up-to-date database. This will include a list of targets sorted by position by the analysts. A club will only make a move when the player becomes available, but will do his best to make that happen. Real Madrid has set the pace with 5 of some of the biggest transfers in the history of the market. Together with their purchase of Gareth Bale, they bought Cristiano Ronaldo for £80 million, Kaká for £56 million, and Luis Figo for £37.2 million. Under Louis van Gaal, Manchester United, though, has splashed the most cash at once, rebuilding the team costing them £193.6 million after the fallout of the Sir Alex Ferguson to David Moyes transition period. While larger clubs such as Madrid and United generate their revenue from advertising, ticket sales, television deals, branding, etc., smaller clubs tend to use advertising and ticket sales to keep afloat, but use major transfer deals to grow and progress. For most teams, the approach is to find young stars, or underappreciated hidden gems, who consistently remain on the bench of bigger clubs or are injured incessantly, and then mold them into brilliant jewels. Daniel Sturridge, leaving Chelsea in 2013 for Liverpool, was a perfect example of the latter. Famous clubs and leagues such as Porto, Wolfsburg, and essentially the entire Dutch Eredivisie scout carefully, hoping to groom players and sell them for massive fees. The famous Anthony Martial's transfer highlights almost every aspect of how much the process can benefit a grooming club. United paid €50 million to Monaco for the 19-year-old Martial, which financed several subsequent purchases for them. But it also saw Lyon get 20% of the deal, as it included a sell-on clause when it first sold Martial to Monaco, and possibly another €30 million to Monaco in bonuses if certain targets were met. Teams like Dortmund and Atletico Madrid became synonymous for producing exceptional talent that they sell for enormous fees, only to re-sign them back a season or two later for almost nothing. Agents. Since the famous Bosman ruling, Sir Alex Ferguson has claimed that agents have been given superpowers. A buying club is not able to speak to a player they wish to buy without the permission of their agent. Therefore, the agents, sometimes the parents or relations themselves, act as an intermediary between the club and the player in question. As the brokers of the transfer market, they establish whether the player could consider moving and the types of deals they are looking for. It is critical for the clubs that these negotiations remain secret, because a refusal can create negative press around a club. For instance, it is only until recently that Alexis Sanchez was found to have refused joining Liverpool in 2014. An agent takes care of the contract negotiations, commercial opportunities, lifestyle openings, and wealth management services. However, there is an incentive for agents to push for big money moves rather than moves that will help the player. As agents are often family members, this incentive encourages players to take these offers. Agents take a percentage of the income of the player for being their agent, but also get massive windfalls when a transfer takes place. In 2012, this percentage for agents stood at 28% of the transfer total. Agents often act as a translator both linguistically and culturally. Many managers have voiced their displeasure with agents for their part in transfers, from Eden Hazard's transfer to that of Luis Figo. One of the most powerful agents in the football transfer market is Milo Raiola from the Netherlands. His contracts under management as of September 2016 are worth $35.6 million a year, with clients including Paul Pogba, Romelu Lukaku, and Mario Balotelli. Milo Raiola received £23 million for his role in the transfer of Paul Pogba from Juventus for helping negotiate the deal. Negotiations involve establishing the length of a player's contract, his target wage, and terms of play. Also, agents' fees are assigned along with the price that the buying club wants from the selling club. The rate of transfers that collapse after negotiations begin is surprisingly low, as the scouts have often prepared well before they make a move. Loyalty bonuses and appearance bonuses are also negotiated. A loyalty bonus is paid to a player if they see out the terms of the contract while at the club. An appearance bonus, on the other hand, is the maximum pay a player receives for playing a game. Typically, if they play full-time, they will receive 100% of the appearance pay and 50% for playing as a substitute. A player will still receive 25% of his appearance pay for remaining on the bench. A player may receive an additional bonus if the club qualifies for Europe or makes a certain round of a cup. ESPN estimates that of the 100 players scouted, only 10 will receive inquiries and only 1 will be signed. With regards to smaller clubs, scouts and managers will have less time to be involved in the decision-making process, and therefore agents will play a more integral role. Break clauses are often included in contracts. They were designed to allow a player to escape the contract with another club if they had paid a minimum fee. This means that if a player is looking to leave a club before the contract has ended, the club will want a minimum compensation. In this case, the buying club meets this break clause amount. Some clubs have been known to set the break clause at an unreasonable amount so that another club will refuse to meet this and the player will is forced to remain. It stops a club's most precious players from being snapped up by the giants in the industry. Third-party ownership. Third-party ownership is the condition under which private investors, whether this is individuals, companies, or funds, own parts of a player's economic rights. The first public instance of third-party ownership in the UK occurred with the transfer of Carlos Tevez and Javier Mascherano. The economic rights of both players belong to a London fund in an arrangement that has been replicated across South American and some parts of Europe. Third-party ownership has been the cause of much controversy in the recent months, due to the allegations that the former England manager Sam Allardyce offered advice to agents on how to get around certain rules. Third-party ownership, or TPO, is a huge source of contention. Investors can influence how clubs perform if they manipulate the movement of players. This undermines the quality of the competition that is enjoyed by so many spectators. West Ham United were fined £5.5 million for the discovery that they materially influenced club policy when signing Tevez. The Football Association banned TPOs from the 2008-2009 season. A spokesman from FIFA stated that TPO has harmful effects on football and its essential values, thereby undermining the overall integrity of the game. South American countries such as Brazil, Argentina, and Uruguay allow football clubs to use the TPO because it enables clubs with more restricted free cash flow to acquire and sell players. Traditionally, South America produces vast quantities of talented players, of which they sell to Europe to generate a primary source of income. TPOs can result in healthy returns if the player is sold on. There are ways around the TPO regulations, buying shares in a club and proceeding to take out cut from the transfer fees. Another method is to simply give the club a loan and expect the return with a generous interest payment. In conclusion, the transfer window is one of the most exciting aspects of the football season, as the changes made to a team can make or break the future performance of the club. Football players have come under extreme criticism as their salaries continue to escalate, but the fact that younger, less-known players are still being treated like a commodity, having little say over where and when they move, is often overlooked. The foundations of the football industry are supported by vast sums of money, where traders, brokers, researchers, analysts, and investors operate in order to maximize the gains that can be made. GMs for many clubs start their careers as consultants and quants. If you analyze the game in this way, you can see it is largely dictated by the financial markets that operate beneath it. You only have to look at Manchester City moving from 10th in 2008 to 3rd in 2010 in the Premier League after Sheikh Mansour bought the club to realize that football is less about the team performance and more about the investment behind it.